Welcome to the Real Estate Channel. In today's video we'll explore the basics of applying and getting approved for a mortgage, either for a new purchase or refinancing an existing loan. Getting a mortgage is a big step in most people's lives. Whether you're a first-time homebuyer or you're upgrading to a larger home, the process can seem daunting. However, with a little bit of knowledge and some guidance, you can navigate the process smoothly. A mortgage is a type of loan that is used to buy real property, such as a house or a condo. The lender, which is typically a bank or a credit union, provides the borrower with a lump sum of money to purchase the property. The borrower then makes monthly payments to the lender to repay the loan. Your credit score is a crucial factor that lenders use to determine whether you're eligible for a mortgage. A good credit score is typically in the range of 700 or higher. If your score is lower, you may still be able to get a mortgage, but you may need to pay a higher interest rate. You'll need to figure out how much you can afford to spend on a home. A general rule of thumb is that your monthly mortgage payment should be no more than 28% of your gross monthly income. Most lenders require a down payment of at least 3% to 20% of the purchase price of the home. The more you can put down, the better your interest rate will be. Before you start looking for a home, you should get pre-approved for a mortgage. This will give you an idea of how much you can borrow and what your interest rate will be. You should shop around to find the best mortgage for you. Look for a lender that offers competitive interest rates and terms that work for your budget. Once you've found a lender that you want to work with, you'll need to apply for the mortgage. This will involve submitting your financial information and other documentation to the lender. Once your application has been approved, you'll be ready to prepare for the closing on the mortgage. This involves signing a lot of paperwork and paying any closing costs. Here are some tips to help you get the best mortgage possible. If your credit score is lower than you'd like, take steps to improve it before applying for a mortgage. This can include paying off debts, disputing any errors on your credit report, and making all of your payments on time. Save for a larger down payment. The more you can put down, the better your interest rate will be. If you can't afford a large down payment, consider waiting a little longer to save up more money. Shop around, don't just go with the first lender you find. Contact and interview multiple lenders to find the best interest rates and loan terms available for your situation. This will give you an idea of how much you can afford and what your interest rate will be. Don't take on new debt. Once you've been pre-approved for a mortgage, avoid taking on any new debt, such as a car loan or a credit card. In conclusion, getting a mortgage can seem overwhelming, but it doesn't have to be. By following these steps and tips, you can get the mortgage that works for you and your budget. Remember to be diligent, patient, and don't take on any new debt before closing on your mortgage. We wish you a smooth and easy process. Good luck. As always, thanks for watching this video. We hope you found it informative and enjoyable. If you're new to our channel, please be sure to hit the subscribe button and turn on notifications so you never miss a video. We publish new content every week, so there's always something fresh and exciting to watch. Don't forget to like and comment, and let us know what you'd like to see in future videos. We value your feedback and always strive to improve our content based on your suggestions. Thanks again for your support. We'll see you in the next video.